Hello everyone, welcome to this lesson where we are going to talk about trend lines and how to determine a trend line. So in the previous lessons we have discussed on the issue of swing lows and swing highs and how to be able to tell whether the price is in an uptrend whereby it makes higher swing highs and higher swing lows, or it's in a downtrend where you can see this in terms of lower swing highs and lower swing lows. So we want to add the idea of trend lines to our lessons so that we can be able to use the swing highs and swing lows within a broader range of tools that we can use to be able to tell the market direction. So first up, we are going to look at an uptrend. Remember, previously we said an uptrend is the tendency of price to continue in an upward trajectory over time. So when you look at the candles, you are seeing the price moving in an upwards direction over a given range of time, or probably a range of candles that you'll be looking at. So in this case here, we have got candles that we are looking at. And these candles are showing that the price is going in an upwards direction. So one thing you need to note first is that for you to be able to draw a trend line, you need to connect at least 3 candles. So you need a minimum of 3 candles. Some people can use 2 candles. It usually depends, but ideally I want to see 3 candles that I can connect using a trend line. The subsequent candles would only serve to confirm that the trend line that I have determined is correct and is progressing according to what I thought it should do. Now, trend lines show you the trajectory that the price is expected to take as it goes up and down through the swings. So when it swings high and it comes down hard, we expect it to turn when it reaches a trend line. So in other words, you can look at a trend line as probably predicted support that the share is expected to follow in an upwards direction. So the second thing that you need to consider is that for an uptrend, you are looking at an upward sloping trend line. So in other words, if your line is not sloping upwards, then you cannot say I'm having a trend line that is showing an uptrend. So for a downtrend, it would also be a downward sloping trend line that you'll be looking to see from your chart. Now, I use the body of the candle, for example, this, to draw the trend line. Some people use the swing highs as well. But if you are a starter, I would encourage you to use the body of the candle. In other words, you are only considering the opening and the closing price to draw your trend lines. So in this case, we are looking at this chart. So I'm going to draw a line to show a trend line. So I'm going to begin from this end, and I'm going to just draw an imaginary line. Let me just change it so that it can be more visible. Let me look for a better color. Okay, that's visible enough. So now I'm looking to draw a line that passes through or cuts the candle in half, because I know that is the midpoint. So in other words, if I click there, I can see my line is moving through that white dot in the center. Then I need to make sure that it's connecting the white dot also in this candle. This one is projecting outwards, which is fine. So I'm going to say I've got 3 candles that are confirming my trend line. So now I'm expecting as price moves, it's going to move within the direction of that line. So in other words, I should see price move in this way. Then it bounces off that line, it goes up. bounces off again, and it bounces off. So if I am stretching this line going ahead, it should give me where I expect the price to fall and begin to rise again when it meets the trend line. So this is what we would expect when we draw trend lines on a chart. So this is what I would expect to see for an uptrend. Now, as you have noticed, I've ignored the green candles, because when you are drawing an uptrend or a trend line that is for an uptrend, you are looking at the low prices. Only consider the low priced candles. These candles are showing me the opening price is here, but the high price is there. So the green candles would fall outside of what I'm considering when coming up with my trend line. If the green candle was here, I probably would have considered it. But here we can see that it's sitting there. And for us to, if we were to draw a trend line, then it would have to come and zigzag towards here, then go back upwards, which defeats the purpose because we are looking to draw only one line. So we are using the swing laws in this case. So that is how we depict an uptrend. Now, sometimes you would see that this line is a bit steeper. If I am to replicate it and put another line like this, you would see that this line is closer to horizontal than the other one. I can put another line as well here. And this one would be closer to just being a horizontal line. Now, the steeper the trend line, the more momentum that is shown in the direction of the trend. So in other words, this line has got more momentum than this line. And this line also has more momentum than this one as well. So the steeper the line, the more you can see that price is pulling in a particular direction, in this case in an upwards direction. For a downtrend, we are saying this is the tendency for a price to continue in a downward trajectory over time. Now, if I may go back here and say, if you are drawing an uptrend, you are drawing it from the lower side of your candles. In other words, your candles it's like they are growing above your trend line. Now, this is the downtrend. For a downtrend, you are looking to draw a trend line above the bodies of your candles. So in this case, you are looking at the swing highs. Remember, previously we looked at the swing lows, but here you are using the swing highs to determine your trend line. So in this case, I'm going to bring this line that I have, and I'm going to put it there. And I'm looking at my swing highs of the green candles. Because in this case, I want to be looking at the closing price. Previously, in the uptrend, we were looking at the opening price. So here we are looking at the closing price. So for this one, the closing price is here, and this one is here, so I would not consider those ones. So you see now I've drawn my line to pass through almost the midpoint of the three candles. Then now I say I have got a confirmation of a downtrend line. So now what I would expect going forward is that price would be swinging upwards, but then it bounces off the trend line and it bounces off here again and it bounces off. So a trend line sort of gives you guidance of how the price should move when it approaches the trend line. Of course, you'll get times where the price overshoots the trend line, then maybe it reverses and comes down again. or it overshoots maybe for a day or two, then it comes back to the other direction. So you always need to have that flexibility in mind to say, when things move above the trend line, are you seeing that there is enough momentum for it to continue? Or usually when it breaks above the trend line, it will come back down to retest. If it bounces off that trend line, then you can say, I have got confirmation that the trend is now moved to above the line in the other direction. But usually an uptrend is broken and the price goes into sideways movement, or it's broken, then the price goes to the downtrend. Remember, in previous videos, we looked at the price trajectory of the swing highs and the swing lows, and also we have got the turning points of the candle or a group of candles. So in this case, this is what we would expect. So whenever you draw a downtrend line, you are looking to put it above the candles, not below. Below, we are looking for the uptrend. So you need to remember that when you're doing your trend lines. Then the last one is the ranging trend, whereby price is moving between fixed points and going up and down. So it's oscillating between 2 points. So in this case, we are expecting to have a closer to horizontal line. So there I've got this one candle and this second candle, and also this candle. Now for a ranging market, I am looking at, it can be red or green candles that I can use to look at the trend or the direction of the market. I'm not only looking at red like what I did for an uptrend, or only green for what I did for a downtrend, but I'm looking at both. Then I need to have another line to determine the upper point where the price is swinging. So in this case, I'm going to put it there. So now my expectation is that price is going to swing between these 2 points. I would expect price to move in this direction. So this is what I would expect to see the price doing over time. So this is for the ranging trend. If you are looking to buy or trade this kind of setup, you are looking to buy closer to the bottom line, then sell closer to the top line. As it moves like that, you will be buying, then you sell, you wait, you buy again, you sell, you wait, you buy again. So you would be able to have made from here, if it's maybe 7%, you'd say that's 1.7%, 2.7%, 3.7%, and 4.7%, which is an easier and good and predictable trade, which everyone should be able to see and be able to profit from, provided you stick to the rule that you are going to buy at this level and sell at that level. If you buy at the midpoint, it means you are reducing your potential for profit by probably half. So that's it for this lesson. In the next lesson, we'll continue to look at trend lines, but this time we'll be opening charts and trying to draw trend lines and see how these trend lines interact with the charts over time. Thank you.